Welcome to Connected Payments with IXOPay, where we talk to the payment providers powering global commerce. I'm Morgan Worrell here with Thomas Beinhart. Join us as we explore the integrations, trends, and tech shaping the future of payments. Welcome, everyone. We're live today from Money 2020 in Amsterdam. Our guest today is Daniel Kornitzer, Head of Global Partnerships at EBANX. With a remarkable 20-year career spanning technical management, including pivotal roles at PaySafe and pioneering several industry firsts, Daniel is a leading voice in fintech and payments. It's great to have you, Daniel. Thank you.
Great to be here. Thank you so much.
To kick us off, for those who aren't familiar, how would you describe what EBANX does, and how is EBANX helping merchants succeed in high-growth regions like Latin America, Africa, and India?
So essentially, what we do at eBanks is to bridge the gap between global merchants and consumers in emerging markets, essentially delivering success, high performance, and that benefits consumers because they can access, the global economy and buy the products and services that they want. And it helps merchants sell their services globally and into markets which can be complex. So we abstract that complexity and enable them to accelerate go-to-market in these regions.
Daniel, let me follow up on that question. What makes eBanks unique when it comes to helping merchants either enter and grow in Latin America's dynamic payment landscape?
So I think that it's a great question. Performance is the key because when you think of, obviously, when we offer services, we need to be competitive. But once you're in the ballpark, you're competitive, then it all boils down to performance. And that comes in the shape of auth rates or success rates, preventing fraud. And the way I view payments, I mean, the analogy that I often use is that payments are like an onion, right? With 1,000 layers.
Yes.
Because take, for example, you want to facilitate payments in a country, let's say in LATAM, like Brazil. So first you have optimizing the credit cards, bringing it from international to local, which can by itself boost conversion by 15 to 30%. Then you have accessing things like installments as part of the card, especially for high ticket items where you can enable the consumer to pay in 6 or pay in 12, greatly increasing the AOV and the top line for the merchant. You have network tokenization, you have local anti-fraud, and then you have the availability of account-to-account methods like Pix, for example, and point in case in about 10 days, Pix is going to launch Pix Automatico for subscription. So it's continuously changing and adding new features, which are super useful for the industry. And then you have, relevant digital wallets like NuPay, like Mercado Pago, like Nequi in Colombia, like Yape in Peru. Most of these actually support also subscription payments. And each one, if you look at the uplift of adding, let's say everything stays the same and you add Pix, well, 16% uplift. Now everything stays the same and you add Mercado Pago, well, that adds another 8%. Now you add NuPay, depending on the vertical, of course, but you could have a material impact on the merchant. We're not talking about adding 1% or 2%, but we're adding, potentially we can double the top line for the merchant. So it's very material.
I mean, you named already some of the payment methods, but in your opinion, what are the key payment methods the merchant should prioritize in Latin America today? And how does eBanks support those methods to ensure seamless and successful transactions?
So I think, look, I think that it all boils down to relevance, right, Thomas? I don't believe that I'm a techie at heart, but that being said, I don't believe that we should be prescriptive in trying to tell consumers to use one or another method. Our job is to offer the relevant methods and let the consumer choose what works for them. And that changes over time. Like if you rewind 10 years in Brazil, people were using boleto, which is archaic, right? People would go online, buy something, get a barcode or a QR code, then go to a store. They had 3 days to go, pay in cash. I mean, it's for the birds. But today you have Pix. And what did that change for the market? Well, it's convenient, it's real time, it's secure, and it's low cost. Low cost for the consumer and also low cost for the merchant in terms of acceptance. So it's offering all the payment methods that are relevant to that geography and that serve well the consumers. Because at the end of the day, they deliver a higher aggregate auth rate.
Yeah, makes totally sense. Following up, especially when it comes to merchants, what is one thing, in your opinion, about doing business in Latin America that often merchants get wrong? Yeah, and how do you help them to overcome this?
Yeah, another great question. You know what? I think that the best the worst mistake that you can make as a merchant, but I'll give you another analogy that has nothing to do with payments, but it proves the point. The worst thing you can do is assume that everything is like in your home country. So if you're in North America, if you're in Europe, just assuming that things in Brazil or in Peru or in Nigeria or in South Africa or in India are exactly the same as they are home. Take, for example, acquiring in Brazil. If you are not familiar with the market, you probably won't know that in Brazil it's T plus 20 or T plus 30. And most acquirers in Brazil make no money on acquiring. It's almost like a loss leader. They make all their money on the lending, on anticipating the funds. Why so? Because they're lending against a guaranteed receivable. The merchant has a receivable from Visa, MasterCard, which, unless the merchant is fraudulent, is guaranteed, right? Unless the merchant doesn't ship the goods, but it's guaranteed. So you have no credit risk and you're lending against that and you're making all your money on the interest that you're charging and your spread. And you can afford to give the acquiring at cost because you're making all your money. So unless you know the Brazilian market, you would not know that that's how it's played there. So I think I remember back in my earlier in my career, I was managing about 300 people in India. And when I landed with my, Canadian US experience, the first thing was to learn how people work there, to their culture, and it was a humbling experience because if you arrive and you try to impose and assume that everyone functions in the exact same way as they would in Germany or in Canada or in France, I don't think that's a good way. And I think merchants should spend the time to or work with people that have a deep understanding of the markets they're trying to penetrate.
Speaking about IXOPay and EBANX, there is currently an integration available on the payment orchestration platform. And what do you see as the biggest benefits for merchant using EBANX through IXOPay, especially when expanding or optimizing operations in Latin America?
Great question. I think that here we're talking about creating a value proposition that combines two best-in-class products. So you've got a leading orchestration platform, which has the benefit of providing a single door, a single point of entry for the merchant, combining reconciliation, integration, access to all the payment assets. And on our side, we have a deep knowledge of the markets we serve with like 400 people on the ground in Brazil. And that combination enables the merchants to access all these payment assets through a single door in a very convenient and cost-effective way. I think that's the joint value proposition. I believe that we've integrated something like pretty much every major market in LATAM, I think 13 countries for both cards and APMs. So I do believe that's a good value proposition for merchants.
But following up here, I mean, beyond Latin America, where EBANX is known that it's one of the leaders there, India definitely, and countries in Africa, are there other emerging markets EBANX is currently exploring for future growth?
Yes, so currently we are in 29 countries. That's 17 in LATAM, 11 in Africa and India. And we're always exploring expansion. We have our criteria for choosing the markets that are more auspicious for the next market. So we're looking at Asia, we're looking at Middle East. There will be probably announcements in the next year, maybe sooner. But we look for countries that have a high growth consumer spending. I mean, if you look at Southeast Asia in the next decade, consumer spending is forecasted to grow by 122%. If you look at LATAM, it's 57%. If you look at Africa, it's 103%. So high growth, growing adoption of digital, e-commerce and an infrastructure that's evolving in the right way with, the likes of, Pix, UPI, new services that make it easier and that provide the right kind of a confluence of factors. Maturity of infrastructure, growing appetite by consumers and also a propensity for, or a good opportunity for cross-border, because at the end of the day, we do help companies sell into those markets. So those are the type of factors that we assess in trying to pick the markets that are going to be most effective for expansion.
Yeah. Continuing on this looking ahead trend, what trends or innovations do you believe will shape the future of payments in emerging markets, and how is eBanks preparing for them?
Another great question. I think that we talked about the evolving infrastructure in the countries as many countries are introducing better services, real time, leading edge. Look at Pix, introduced in 2020. In 10 days, they're introducing Pix Automatico for subscription payments. India has it for UPI AutoPay. And of course, one time. Soon after, I think Brazil will introduce Pix Parcelado, which is Pix by installments, kind of like BNPL. So there is a constant evolution. So yeah, that's exciting because that gives us another element that's very convenient for growth. But in general, if I look at trends, obviously we're looking at AI with not just the daily use in each of our companies in kind of every function from program development to marketing to customer service, risk and compliance, of course. But now with agentic commerce, I think it's fascinating because now we're going to have a machine buying from a machine. So we as a consumer are going to give an instruction to an agent, and that agent is going to go out there and talk to another agent and do a mini RFP or RFQ, right? We're going to tell our agent, buy me a pair of Adidas, size 42, blue, this model, and don't pay more than 100 euros. And the agent is going to go out there, it's going to check pricing, shipping, taxes, customer reviews, a return policy, and in a very cold and analytical way, he's going to find the best vendor, whether it's Decathlon or some other merchant. They're going to actually pick for us. And so there's no checkout anymore because there's no UX because you have a machine talking to a machine through some API. And how are we going to do, what happens to KYC? It's going to be KYA, know your agent. We're going to have to, it brings a lot of challenges as well. But it's fascinating what that opens up as a world of opportunity and a world of challenges as well. So that's one. The other one is, stablecoins and what it does for treasury optimization. In Europe and North America, I don't see the consumer aspect to be that keen. Maybe in Africa and LATAM, yes, or in emerging markets. I think that fiat works well in the Northern Hemisphere in general. But for treasury optimization, I think that stablecoins can be a game changer because no more weekends, no more bank holidays, 24/7, money in, money out. I see, if I were a CFO of a company, I would love to, have that instant. Yeah, so that's great. And the last one is global expansion, which is what we're talking about here. Allowing companies to be able to sell globally very efficiently with high performance and also helping those consumers. We're talking about billions of consumers in the global south that want to access the global economy. They want to buy Google Apps. They want to buy Netflix. They want to buy Disney Plus. They want to buy Uber, Spotify. And if we can help consumers and merchants, we're actually creating a virtuous circle because it's almost like financial inclusion and everyone wins. It's an ecosystem where the merchants win, the consumers win, and the schemes or all the actors in the payment world benefit from more activity and lower fraud, things like network tokenization, better anti-fraud. So weeding out the bad actors, the fraudsters, and yeah.
Yeah. Well, thank you so much for your time. This was a very insightful conversation, and I hope you enjoyed your show.
Thank you so much. It was a real pleasure to join you. Enjoy the rest of the show.
Thanks a lot.